Hi, it is Friday morning, 12th of July, and it is 8 a.m. in New York. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
The tech-heavy NASDAQ really took it on the chin yesterday, closing at 18,283.4, a drop of almost 2%. This ends a 7-day winning streak for the index. The S&P 500 also felt the pressure, reversing its own 7-day climb to finish the day down almost a full percentage point at 5,584.5. Meanwhile, the Dow Jones Industrial Average managed to eke out a small gain, closing at 39,753.8. This marks 2 consecutive days of gains for the Dow. So, what drove this divergence in the markets? Well, tech giants Apple, Google, and Microsoft all saw significant drops yesterday, contributing heavily to the NASDAQ's decline. Apple, closing at $227.60, reversed its 7-day upward trend, tumbling 2.3%. Google followed a similar pattern, ending its single day of gains with a 2.9% drop to close at $185.60. Microsoft wasn't spared either, reversing its own single day of gains and closing at $454.70, a 2.5% decrease. This tech sell-off seems to be fueled by investors taking profits after the sector's recent rally, coupled with concerns about rising interest rates potentially impacting future growth. On the flip side, the Dow's resilience can be attributed in part to gains in the energy and healthcare sectors. Chevron, a major Dow component, saw its stock price rise by 1.2% to close at $158.90, continuing its upward momentum from the previous day. This rise seems to be driven by the continued increase in oil prices. In the healthcare space, Johnson & Johnson closed at $170.40, a 0.8% increase, adding to its 5-day gain of 2.1%. Looking at Apple's performance a bit closer, despite yesterday's drop, the tech giant is still holding on to a 2.7% gain over the past 5 days and an impressive 8% gain for the month so far. Year-to-date, Apple's stock has surged by a remarkable 19%, underlining the overall positive sentiment surrounding the company's future prospects. So, is this recent tech sell-off a sign of things to come, or just a temporary blip in an otherwise strong year for the sector? We'll be keeping a close eye on these developments and bring you expert analysis after the break. Now, let's not forget about some of the other big names in tech. Amazon also felt the heat, with its stock price closing at $195, down 2.4% for the day. This reversed 2 days of gains for the e-commerce giant. NVIDIA, a major player in the semiconductor space, experienced an even steeper decline, plummeting 5.6% to close at $127.40. This erased its gains from the previous 3 days. But perhaps the most dramatic fall from grace was Tesla. The electric vehicle maker saw its stock price tumble a whopping 8.4%, closing at $241. This sudden drop brought an end to Tesla's impressive 11-day winning streak. These sharp declines in tech darlings like Amazon, Nvidia, and Tesla suggest that investors may be reassessing their positions in high-growth, high-valuation companies amidst the current economic uncertainty. The chipmaker's stock has still managed to gain 3.1% since the beginning of the month and an impressive 157% since the start of the year. Despite yesterday's drop, Nvidia has seen positive price movement in 5 of the last 10 trading days. Shifting gears to the broader market, the recent volatility in the tech sector has some analysts wondering if this is the beginning of a larger correction or simply a healthy pullback after a strong run. Others point to the Federal Reserve's upcoming interest rate decision as a potential catalyst for further market swings. We'll be talking to some of the top minds on Wall Street to get their insights on what's driving these market moves and what we can expect in the coming weeks. Stay tuned. Now, turning our attention to the financial sector, we saw a mixed bag of results yesterday. Bank of America continued its steady climb, closing at $41.80, marking 4 consecutive days of gains. Morgan Stanley also showed strength, closing up 1.1% at $104.60, making it 4 gain days in a row for the investment bank. However, not all financial institutions shared the same fate. JP Morgan, after 3 days of gains, reversed course and closed down 0.2% at $207.50. Meanwhile, American Express saw its stock price slip by 0.1% to close at $238.80, snapping a 2-day winning streak. In the payment space, MasterCard outperformed its rival Visa. MasterCard closed at $436.40, a gain of 0.6%, reversing 3 consecutive days of losses. Visa, on the other hand, extended its losing streak to 4 days, closing down 0.2% at $262.60. These mixed results in the financial sector reflect the broader uncertainty in the market as investors weigh the potential impact of rising interest rates and economic growth prospects. This positive trend for Bank of America is mirrored in its performance over longer periods. The banking giant has seen a 2.2% increase over the past 5 days, a 5.1% jump since the beginning of July, and a whopping 26% surge since the start of the year. This consistent upward trajectory underscores the bank's strong fundamentals and positive outlook amidst the current market conditions. Now, let's take a look at the cryptocurrency market, which also experienced some turbulence yesterday. Bitcoin, the world's largest digital currency, closed at $57,057.10, a decrease of 1.2% for the day. This marks 2 consecutive days of losses for Bitcoin. Ethereum, the second largest cryptocurrency, also felt the pressure, closing at $3,083.40, a 0.6% drop. This reversed 3 days of gains for Ethereum. Dogecoin, often seen as a more speculative asset in the crypto space, didn't fare any better. It closed at 10 cents, a decrease of 1.6%, reversing its 1 day of gains. This recent dip comes after a period of relative stability for Bitcoin, but the cryptocurrency remains volatile. Despite the recent losses, Bitcoin is still up a healthy 35% since the start of the year. However, it has experienced a 9% decline since the beginning of the month, highlighting the digital currency's susceptibility to market swings. Over the past 10 trading days, Bitcoin has only seen positive price movement on 3 occasions.